The U.S. economy this entire year has really defied so many expectations. When we came into this year, most economists thought we'd have a recession already, and we just simply haven't seen that. And we've been producing pretty solid growth numbers. Now, how is that? Well, first of all, the economy is very bifurcated. If you look at things like the leading economic indicators, if you look at things like the yield curve, if you look at manufacturing or housing, all of these things have been signaling a recession for well over a year, and it just simply has not materialized. And why is that? Because what we're seeing is the consumer and government spending has been supporting GDP. Now, we're just a little bit skeptical about how long this can last. The consumers are spending, but they're doing this using a lot of credit card debt. We have credit card debt at a record high, balance is high, and when you look at this chart, it's showing us that those that are 90 plus days delinquent on credit cards is the highest that we've seen since the Great Recession. So we think the consumer is going to struggle as we go forward the remainder of this year and into next year. The other factor is that the labor market is also starting to show signs of weakness. And if the prospects for jobs are not that great, then consumers will be a little bit more cautious about how they spend. So we think the economy is going to continue to slow as we go through the remainder of this year and move into 2025. But it's not just the consumers that are getting a little bit skeptical when you look at confidence, it's also business owners. Business owners, when you look at this chart, for example, this shows small business owners the most uncertain that they are about the economic outlook that we've seen in history. If you have a combination of consumers starting to slow as well as businesses getting a little bit more cautious on how they're spending money, this will result in slower economic growth than we've seen in the past couple years.